So what is an order block? An order block is basically a pricing point within the market in which the big financial institutions like to place their buy and sell positions. These are also known as supply and demand zones and can be represented on the chart as the last candle before an impulsive price movement. Whenever price taps within an order block, we often look forward for either a bullish or a bearish price rejection. Therefore, order blocks are however categorized into two. We have a bullish order block and a bearish order block. So, what is a bullish order block? A bullish order block refers to the last bearish candle that occurs before a series of consecutive bullish candles. So, for instance, let's say we are in an uptrend, and we know that whenever we are in an uptrend, price creates higher highs and higher lows. Hence, we know that price creates high highs and high lows. What we are looking for and what we pay attention is this price level. As you can see, this price level represents the last series of consecutive bullish candles, hence the last bearish candle before this price level. We'll mark it out as our bullish order block. So now, there are also certain things I want you to notice. Whenever we want to validate an order block, there are certain things or certain characteristics that we should be able to be aware of. And these are the following. We want to see a breakout structure. So what is a breakout structure? A breakout structure is simply when price breaks the last higher high that was created. In this case, we can see that price broke this high. Hence, we mark it out as our breakout structure, or POS short. So now that our price broke our POS, or created our breakout structure, we also want to see rejection. So what I mean by rejection is, whenever price comes and taps within our order block, we want to see signs or signals of rejection. Meaning we want to see price reject from our order block and then continue to move towards the upside. So this is what we want to see. Another crucial thing we want to see is displacement. So in terms of displacement, we also focus on this price level. We want to see large candles being created. So the green candles have to be large enough in order for us to say that the market is moving in momentum. Hence, when price breaks structure, we want to see these candles displace with greater momentum. When by greater momentum, I mean price creates very large candles. So now, let's take a look at bearish order block. So what is a bearish order block? A bearish order block refers to the last bullish candle that occurs before a series of consecutive bearish candles. So, if we were in a downtrend, just as illustrated below, we know that we are going to create lower highs and lower lows. Hence, if we are in a downtrend, the last green candle before the last series of consecutive red candles, note that green candle stands for bullish and red stands for the red candle stands for bearish. So the last green candle before the consecutive series of red candles will be our order block, and so mark it out as our order blocks. But now we also talked that in order for us to validate this as an order block, we want to see a breakout structure. So now a breakout structure is just simply the opposite. Now we are looking for the last lower low to be broken out. So that will be our breakout structure. And as you can see, price broke the last lower low that was created in this trend and mark it out as our breakout structure. And likewise, whenever now we identify the breakout structure, when price comes towards our order block zone, we want to see rejection. Meaning we want to see signs and signals that price is about to reject and continue to move towards the downside. Hence, in scenarios like this, traders are most likely to make entries and are most likely to use order blocks in order to get a point of interest in order for them to take their trades and hit or take profits. So this is the basic theory behind order blocks. So I've told you and shown you the basic theory behind the order block, and now I've shown you and illustrated the basic theory behind bearish order block. Now, just as it's important to understand the theory, it's now time to apply this and see how we can spot order blocks on the chart. Because looking at for price action data is just as important. So with that being said, let's take a look at the charts. Okay guys, so welcome back. So here as you can see, we are on the Euro USD chart, and you can see that the prior market has been going within an uptrend for pretty much a while. So the first thing that we want to do is to identify order blocks on our charts. So to identify order blocks on our charts, here you can see that the market was going within a downtrend within this price range. As you can see, a higher low, lower low, higher low, lower low, higher low, lower low, and this higher low, which was broken out by price, as price started to go towards the upside. So we'll mark out this as what? As our break of structure. So we call that a break of structure. So now that we have a break of structure towards on our charts, we know that this price leg, the last candle before this impulsive move towards the upside, will be our order block. So we go here and mark out, I think this candle is a what? As our order block. So as you can see, here is a perfect example of what a bullish order block looks like on your chart. But if you were to scroll backwards, you can actually see that there are so many order blocks that you can identify. For instance, here you can see they have a break structure, this low is broken out, and you can also see that what? You can also see that the last candle before this impulsive move was somewhere right here. So we'll mark out this green candle, or just to be much more frank, we'll just mark out this candle right here as a what? As an order block. And look at how price rejected towards the zone. Because rejection, look at this on our first order block. Look at how price rejected. Look at this week. It shows that price is the smart money had already placed their buy orders, forcing price to move towards within an upward direction. Hence, here we would look for what? For buy positions, because this shows us that there is buying power and the smart money had already placed their buy orders. There's a large chunk of institutional buy orders that has caused that has influenced some of these buying positions. So here also you can see that the within this, let's change color, as this is a bearish order block. So if it's a bearish order block, let's give it a little bit red. And as you can see that we have also rejection, and you can see the price is resisting and rejecting this multiple times before finally moving towards the downside. And you can see the last green candle before the respective price leg. This is an example of a bullish and a bearish order block occurring within the same time. Here also you can see a break of structure, high, low, high, and you can see that price broke this high. So we also call this a what? A break of structure. So I'm only annotating this and writing this on the chart for the sake of clarity, so that you can actually spot this and see what I'm doing. So it can actually be easier for you to identify as I go along. So this you can see this impulsive bullish move to the upside. We're looking for the last candle that was respected, and you can see this was also respected. No, actually, let's move lower. If you move lower, you can see this candle was respected as our order block. Even though price didn't respect it for quite a while, but still you can see that price did respect the order block, meaning that order blocks will always be respected within the market. They will eventually be respected, and even though if they don't hold as much as we intend them to, order blocks still work. It's something that shows that they do work within the market. And as you can see, let's try to look for some more order blocks. Here we can also see another one. I think right here you can see that this price leg was broken out, high high, high low, and we want to see price break
Here you can see price broke this high, and this price broke this high. The last green candle, this is the last green candle before this impulsive bearish move towards the downside. Look at this, price retraced. Look at this rejection. Price came back, rejected the order block, and finally moving towards the downside. So this is a perfect example of another bearish order block. So this is a bearish order block, right? So here there's another order block example. As you can see that what we have a break of structure right here. As you can see, we have a break structure. So this is also another order block, even though this one hasn't been respected yet, but it is still an order block. Price will later on respect it, because that's what order blocks. So those institutional orders have to be filled. So another example of another one that hold is another this one. So you can see this is a break of structure. So if you want to write it out, here we have BOS. So this was another big, you can just write it out, but for the sake of clarity, here we can see the last bearish candle before the impulsive bullish candle would be this. And look at how it was respected. Look at how price respected that rejection. So this ranging within the order block is a sign of rejection. As you can see that price rejected, there were orders that were being placed here, and look at this, price finally turned bullish. So this was a bullish take in a bullish order block. If we keep on scrolling, you can see that will be the scenario for this. As you can see, all these order blocks have been created. So these are just examples of order blocks that you can actually identify on your chart. As you can see, there was a bullish order block, and all of these are examples of order blocks. So we want to see a break of structure. Once we see a break of structure, we want to see price being rejected towards our order block. And as you can see, price was rejected. And once price is rejected towards the order block, we want to see the order block. You want to see price then move towards the intended direction. So yeah, order blocks are actually something that you can actually use in your trading arsenal. You can actually add them, and they actually are a tool and a concept that actually you can actually see in any asset class, not only on Forex, but you can actually use order blocks on crypto, indices, and so on. So yeah, order blocks. There are examples of order blocks marked on your chart on your USD. I would suggest you go into your own charts, start marking out these order blocks, and start seeing them for yourself, because that's how you can actually have an eye for this. You can just go into your charts, into TradingView, or even MetaTrader 5 or MetaTrader 4. You can just mark out these zones and try to spot them, spot the break of structure, spot the order block, the last candle before the impulsive move, and try to identify them on your chart by yourself. And anyway, with that being said, if you enjoyed this video, if you gained any value from it, it would be very great if you like and subscribed. And with that being said, stay ultimate, safe trading, and see you in the next video.